Hey, welcome back. It's Nolan Mathias from Mortgage 360. And if you've been following along to our first-time homebuyer series, you know that we've talked about all things buying a home, like saving for a down payment, getting pre-approved for a mortgage, finding the right realtor, how to write a contract, and in today's video, the fifth part of our series on first-time homebuyers, we're going to talk about how to get approved for a mortgage and the step-by-step process. Now, just because this is a first-time homebuyers series, don't think you need to get scared away if you are not a first-time homebuyer. This stuff all applies to everyone, but it is obviously targeted to first-time homebuyers, so we're going to go through the basics in a step-by-step process. But before we get into it, do me that favor, hit that subscribe button, hit the notification bell, and please hit that like button for the YouTube algorithm so more people like you can see this video. Hey, and while you're here, feel free to ask your questions, your mortgage-related questions, your real estate-related questions, your housing in general questions. Feel free to put them in the comment section below, and we'll answer them almost immediately. As fast as you can ask them, we'll get to them. Okay, so obviously we've done all the hard work. We've saved the down payment, we've gotten the pre-approval, we've found our realtor, and we've written the contract. That's all the hard stuff. And if your pre-approval was done properly, then this next step, which is the actual approval process, should be pretty simple and straightforward. In fact, it should almost all be done for you by the time you get to this stage. But we're gonna go through it in detail, step by step. And usually what happens is when we do a mortgage application for somebody, we send out an email with all of these steps that take place in the process. In fact, we call it our simple steps email. And basically what it does is it outlines the steps of getting a mortgage. So all mortgages start in the same place, and that's with an application. And you can either get an application to be pre-approved, or you can get an application to be approved if you've already bought a house. And once you filled out the application, then you'll go about collecting documents. Now, if you've already written an offer and you haven't provided documents yet, this is a time is of the essence scenario, because you basically got 5 to 10 business days for your financing condition in order to get your entire mortgage approved. So that means that you need to get documents in fast so that your mortgage broker can review them, send them to the lender, have them reviewed, and make sure that there's no issues. The documents that you're going to need are pretty simple. If you're employed, you're going to need a job letter, states how long you've been at your job, what your title is, and your salary. You'll also need a pay stub and then proof of where your down payment came from. If you're self-employed, you're going to need a little bit more documentation, most of your tax documents, so your T1 generals, any T4s or T5s that you've issued yourself, and then your notice of assessments from Revenue Canada. Once you've gathered up all those documents, you'll send them over to your mortgage broker along with your purchase contract and the listing details for the property that you've bought. Then the mortgage broker will do their mortgage magic, put it all in the system, help you select the lender, and then submit it to the lender. Now, the part about selecting the lender is interesting because there's going to be different ways that it's done. In the cases where you go to a bank mortgage specialist, they're pretty much just going to say, okay, well, we're BMO, so we've got one set of products. Here they are. You can either choose variable, fixed, and then if you choose fixed, it's going to be, do you want a short-term or a long-term mortgage? It's going to be very, very simple, and they're pretty much going to dictate the product features by the fact that you're sitting at the BMO desk and not somewhere else, and the features that they have are the features that they have. Now, if you're dealing with some mortgage brokers, what they will do is they'll take a look at your application and they will go, okay, I think your mortgage best fits at this place. And they'll tell you why, they'll explain it to you, and once you give them the go-ahead, hopefully you give them the go-ahead, because sometimes they don't actually ask for the go-ahead, they just submit it and then come back to you with a commitment letter without talking about your lender at all. But hopefully what they do is they have that conversation and they say, here's where we recommend that you send your mortgage, and they'll submit it there, and that will start the approval process. Now, for brokerages like ours that are a little bit more consultative, what we'll do is we'll take the information that you've provided along with some suitability questions that you have answered, things like if you're ever going to move, if you feel like you want to be able to pay down the mortgage faster, if you want to be able to get a lower rate during the middle of the term and be able to pay out your mortgage and move to a different lender. Questions like that are things that we'll ask. And then what we'll do is we'll get 2 to 3 recommendations. Typically what we'll do is we'll tell you about the best discount mortgage you can get. Then we'll tell you about the best bank mortgage that you can get. And then what we'll do is we'll make a recommendation on which mortgage we think is most suitable for you. And in my opinion, that is the way that most brokers should operate. It is the best way to operate that is in the benefit of the client, which is you. So then once you've selected your lender in consultation with your mortgage broker and you've selected your product, whether it's a variable or a fixed, they'll submit it to the lender and it'll go into their underwriting queue at that lender. And then what will eventually happen is when it's picked up for underwriting, the underwriter will go through it, look at your credit, they'll look at the property, they'll look at your income, and they'll see if it's a deal that they want to approve. Now, if your mortgage is an insured mortgage, then there will be another step in the process, which is sending it to the insurer for the insurer's approval. Now, this is the only time that an insurer will ever see your deal. Insurers don't do pre-approvals. So this will be the first time that they've seen your deal, and ultimately the insurers have the final say. So if they're willing to insure your mortgage, they'll issue an insurance certificate number back to your lender. Then your lender can go through the process of actually approving your mortgage. Now, if you're putting more than 20% down and the mortgage isn't insured, then you don't have to worry about that step in the process. The lender gets to make the decision by themselves whether or not they're going to approve you. Now, regardless of whether it's insured or not, once the lender approves you, then what they will do is they will issue what's called a commitment letter. And the commitment letter details the mortgage that they are offering you. It will have things like the amortization, the rate, the total mortgage amount, insurance premiums if they happen to be there, the taxes that you will pay and whether or not you will pay them through the lender or through the municipality, and all the details of the mortgage. It'll also have their standard conditions as well as the conditions that you need to meet in order to get full approval for that mortgage. And that will be where the documents that you provided come into play, because those things will be reviewed sometimes by the underwriter, sometimes by a document fulfillment person. And if they are acceptable to the lender, then the lender will sign off on the conditions of your approval. Now, once they've signed off on the conditions of your approval and you've reviewed the commitment letter, you sign the non-binding commitment letter in order to agree that you would like to take on that mortgage. Now, you still can choose to take a different mortgage. You can still choose to go to a different lender. Most commitment letters aren't binding. There's nothing in them that says that you have to take the mortgage, but signing the commitment letter will issue what's called the mortgage instructions to your lawyer. And what that basically is the lender saying to the lawyer, here's the details of what we've agreed to with the client. Please create a mortgage document for these details that is to be signed by the client and then registered against the title of the property. At this point, if you've met all the conditions of the lender and the lender's happy with all of your documents, then you can go ahead and remove your financing condition, which will be done by talking to your realtor and basically saying, hey, I've got my mortgage done, it's ready to go, and we can go ahead and remove that financing condition. At this point, you bought the house. Congratulations. Now, at this point, it's pretty much time to sit back and relax until such time as you go to sign your lawyer's documents. Now, one thing to consider here is that if there's a period of time, an extended period of time between when you waive your financing conditions and get your approval and when your closing date is, let's say it's 30 days or a couple of months, what you're going to want to do is make sure that your broker or yourself is watching interest rates, because if interest rates go down, then you want to make sure that it's requested from the lender that you can have the lower rate. Now, some lenders allow the broker to do this once. Some lenders allow the broker to do this indefinitely. First National, the lender that we use the most, pretty much allows us to request rate drops as often as rates actually drop. In fact, today, the morning before I recorded this video, we had a client who was sitting in his lawyer's office. We noticed that his rate could be a little bit lower, and we requested that First National reinstruct the mortgage with the lower interest rates so that that client could save a little bit more money. But you want to make sure regardless that you are paying attention to this and that your broker is also paying attention to this. And it's a good idea to set a reminder in your iPhone or your Samsung or whatever you use to call the broker about 7 to 10 days prior to your closing date and just make sure that there isn't any lower rates available. Now, as your closing date approaches, which is the day that you'll take possession of the property, your lawyer will go to work. They'll get the instructions from the lender. They will calculate the purchase price less the amount of mortgage that you're getting, which will be your down payment. They'll subtract any deposits from that. And then the lawyer will add their legal fees and any other costs associated with getting the mortgage registered. And that will give you an amount that you need to bring into the lawyer's office for your down payment. Now, one point of confusion is people often think that the down payment goes to the mortgage broker. We do not handle your money. We don't want to handle your money. The bank doesn't want to handle your money if you're processing a real estate transaction. It is the lawyer that handles the money. So where you take your down payment check to will be to the lawyer so that they can, in combination with the mortgage, combine it, take their fees off, take any real estate fees off, and send it to the seller. And that will ultimately close your transaction and allow the title to transfer from the previous owner to yourself. So that's essentially the mortgage process in a nutshell, start to finish. Again, if your pre-approval was done in advance and documents were asked for, this should be fairly straightforward. If not, it could end up being the most stressful week of your year. But regardless of which it is, the good news is if everything is done correctly at the end of the week or the end of the 10 days that it takes to typically do this process, you will be told, congratulations, you've been approved for the mortgage, all the conditions have been met, and you now have bought a home. Congratulations.